Today we're talking about APR versus interest rate on your mortgage, and we're getting started right now. Hey, what's going on? I'm Emmett Dempsey, mortgage advisor with Geneva Financial here in beautiful Port St Lucie, Florida, and welcome to another mortgage and home buying tip. If this is your first time here and you want to learn more about mortgages or the home buying process in general, go ahead and subscribe to my channel and ring that bell so you don't miss anything. The APR versus your interest rate in your mortgage. What is it? How does it affect you as a mortgage buyer? I get asked this question all the time because it can be confusing. The APR is a required term we as lenders have to provide after 1968 in the Truth in Lending Act. It kind of standardizes the way that we submit information to prospective borrowers. So an interest rate has direct effect on your payment. It is the total cost of borrowing over a certain period of time. And in most cases, it's a 30-year fixed, it's a 30-year or 360 months, and basically they divide that for your interest, and that's what your total borrowing cost is. It's basically the core of what your borrowing cost is. If you think about a hamburger,
hamburgers, the cornerstone of any nutritious breakfast.
Basically how much the meat is. So, however, for like most hamburgers, you know that there's a bun and all the other accessories, ketchup, etc. So, what does that mean? Basically, that's what the APR is. It's basically your core interest rate plus all of the fees mixed in. So the APR tries to assess what the total costs are. It includes all of your mortgage insurance, lender fees, points, and also no matter who buys them. Now, APR attempts to be able to look at side by side whether a loan is good, whether one loan is more expensive. However, there's flaws in the APR. And I'll go ahead and talk about that right now. Basically, the APR only has total fees. So mortgage insurance, the settlement fees, lender fees, but also whoever pays them. Sometimes your seller will pay them. However, it's a cost of the transaction, so even if the seller pays, you don't pay as a buyer, it's still included in the APR. So is it really more expensive? It's not cash out of your pocket, it's just fee of the loan. So that's one flaw. Also, whether you close at the beginning of the month versus the end of the month, it could be different APRs because the per diem interest, even though it's settled at the end of the next month, that's considered a lender fee, which is, that's just the way that it's counted. It's counted as an APR fee. So at the beginning of the month, if you have 30 days of interest, especially on a big loan, that's huge. So lenders who quote on the same mortgage can assume a 1 day of prepaid interest versus 30 days, and that can be wildly different APRs. Also, APR assumes that inflation's zero, which we all know is not true. Things get progressively more expensive, so the time value of money, dollars today are always worth more than dollars tomorrow. It also assumes that you're going to hold your loan for 30 years, which is also not the case. Most folks move every 5 to 7 years. So, the APR can be a misleading thing, but it's something that we have to provide. Another thing, too, on government loans, FHA and VA have funding fees. So a lot of times they're financed. It's also, whether the seller pays versus the buyer pays, but also whether they're financed or cash. So you have VA loans that are 2.3% for first time folks, and then 3.3% for subsequent. 3% of the loan is a fee, but you don't pay it in cash. So that's another reason why it's very misleading. So what you need to look at, and it's what I provide to my clients, is a total cost. Total cost over time, 5 years, 15 years. I provide all my clients with a mortgage coach total cost analysis. So you have to see based on the dollars you're investing versus what the total cost over a certain period of time, and of course your goals and your holding time. If you plan on living there 5 to 7 years, it makes sense to pay points. And those are things that we talk about when I present you options, because believe it or not, there are options. So definitely go ahead and do that. If you want your own personalized mortgage coach consultation, if you're buying a house, refinancing, definitely give me a call. Go to DempseyMortgage.com. Again, if you want to learn more about mortgages or the home buying process in general, go ahead and subscribe to my channel down here and ring that bell so you don't miss anything. Thank you so much for watching, and I'll see you on the next one.